Good morning. Very nice to be back. It was a strong quarter for us. So you mentioned the reported growth of 16%, obviously a little bit of help from currency, but actually in terms of underlying like-for-like growth, it was 6% in the quarter, which is the strongest growth that we've posted all year. This has been the strongest quarter that we've had. With a very strong performance in our workforce solutions business in Adecco, where we actually grew faster than our peers in Q3. And that's a reflection of the investment that we've been making in the business. Lower down the P&L, an EBITA margin of 3.6, which is solid. So we're very happy with the performance in Q3.
A little bit about that investment. Do you feel that you're investing into what is likely to be a pronounced slowdown now in most of the markets that you operate in? You would have heard us just talking about the Federal Reserve's intention to carry on hiking interest rates. At what point do you think labour market trends begin to seriously crack?
Well, look, there is macroeconomic uncertainty out there. There's no question about that. But there are a couple of interesting points. Firstly, the economic environment that we see around the world, and we operate, as you know, in 60 different countries, is not uniform. There are plenty of areas where there's still growth, plenty of sectors which are doing well right now. But also, and you mentioned it, the labour market is really still very dynamic. We've got talent scarcity, we've got skills gaps, we've got wage inflation. It's actually driving healthy demand for our services as a talent business. And that means that the investment that we've made is actually generating good returns. We've seen an acceleration of growth momentum in our Adecco business every quarter. So, we're very cognizant of what's happening out there. We're managing the business with agility, but the labour market and the talent market is still a very dynamic market, driving healthy demand for us.
Morning, Coram. You just alluded to something that's fascinating for all of us, wage inflation. How hot is the wage? I mean, there's always wage inflation. No one moves for a lesser salary. Well, not if they can help it anyway. What is the wage inflation moment and how hot is it and how much of a risk is that to monetary policy?
So, I mean, this has been a feature over the last 3 or 4 quarters, and I think we've talked about it before. The talent scarcity, the gaps in skills, companies who are really looking to fill particular areas, particular specialisms, it is driving inflation, and it has been over the last 12 months. It's still fairly hot. So, on average across the business, it's mid to high single digits. It's slowed a little bit between Q2 and Q3, but it's still very much a feature of the market.
So let me get this right. High single digits, that is on the demand side rather than on the supply side, I guess, really, I'm coming across. Again, I'll ask you the same questions I asked the CFO of ING. We've got a problem here on interest rates being woefully too low in Europe, haven't we?
I'm not sure that I can really make comments on interest rates, but in terms of the macroeconomic environment, I think the driver for us is what's happening in terms of the talent market, and the talent scarcity, skills gaps, wage inflation. It's all driving pretty strong demand, and we are very agile in terms of the way that we're going after that.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.